I think we're live. I think we're live. All right. Hello and welcome back to the Wealth Equation with your host, Maurice L. Wilson. Today, I am happy to have we can't say partner in crime, right, Marcus? That's not compliant. My, my partner in finance, the illustrious, the great Marcus D. Johnson of Johnson Capital. I'm gonna let you introduce yourself, Marcus. Tell everybody who you are.
Yeah, thanks again, man. Marcus Johnson, from Nashville, Tennessee. Johnson Capital Planning is the firm that we have that me and Maurice been working together for the last, what is it now, 4 years?
It's coming up. Yeah, 4 years in February. Four
Yeah,
years in February. Wow.
it,
Okay.
it doesn't seem like it's been that long, but yeah,
Yeah.
4 years.
All right.
And so yeah, I'm happy to be here, man. Happy to have a conversation, an ongoing conversation, because it's a lot of things going on in the economy. It's a
Exactly.
lot of fear right hearing from clients, and so just kind of being that, like that pilot that kind of comes on and you hit that turbulence, right, and then they just come on the speakers and tell you that things are easing, and for whatever reason you just start to feel better. That's what we want to kind of have with you guys too, is just kind of make you feel better about what's going on in the economy.
Exactly. Exactly. I actually was in a meeting with a client an hour ago, actually, right up the street, and he's gung ho. He's like, "Hey, Maurice, push all my chips in." He's the exception, I would say.
Yeah, for
There's,
sure. For
there's
sure.
everybody else who just they aren't looking at statements. They aren't, they're scared to log into their accounts. And I think the general feeling on the street is just fear and trepidation. And but we've had some changes in the narrative, at least in the last 48 hours. Do you think that with some of the words coming out of the administration that the worst is over, or what's your take on where we are right now?
I mean, so I think it's a two-part situation, right? So when you think about, if the tariffs do decide to disappear, right? And things can kind of go back to normal, then cool. Because I think part of the problem is that how do you value a company if you can't really determine what the end cost is, right? And so I think a lot of the trepidation is coming because of that, right? So you can't price or value a company if you don't know what the end cost is going to be. And
Right.
so because of that, that's kind of what you're seeing, the trickle down effect of that. Now, if that does decide to go away and the tariffs aren't a thing, then maybe we can kind of flatline. But I think there is a caveat to that, right? So what people aren't talking about is all of these companies are still laying off.
Right.
So I think that that's a bigger indication that something is really going on besides just the tariffs, right? I think that's a big problem, but you have companies across different sectors that are still laying off, right? So I think it would be, it would be different if it was having a conversation, if it was one industry that was laying off, people. But the fact that you're talking about multiple different industries are laying off people, I think that that's a pause to have some concern, and have a different outlook. And so I would tell clients that I would rather be patient to kind of let this thing, do what it does before we just go all chips in, right? And being a little bit early to market, going back in and really starting to get kind of aggressive.
Yeah, I mean, case in point, a couple of different examples. One, let's just start with pushing your chips in. My favorite bear market story is Amazon. 1999, nearly 1,000% gain. 2000, 75% drop. I'm sorry. Yeah, 1998, 1,000% gain. 99, 75% drop. 2000, 45% drop, and then it's off to the races, right? So if you came in after the 75%, you still lost your shirt, and then it finally went up. So you can be a little too early, but if you had just even waited and was a year late, 2 years late to the Amazon story, you still made a ton of money by 2025. So if it's like when styles change, like when hip hop got in style, it was in style for 25 years, a generation, right? And so you don't have to be the first one to that party. But to your point about all of the other things that have been happening with the layoffs, I mean, what happens when one of the largest employers in the country, the federal government, offers all these buyouts, lays off all these people, fires all these people? Buyout or not, these people are spending less, right? Okay. Tourism related industries have definitely been impacted, right?
They're taking
Tourism
a
is
hit.
going to take a hit, right? So then you got that. tech industry, like Intel is going to lay off 20% of their workforce. I think that was always going to happen, like you said. So you're having, I know people that are tied to the tech industry, Amazon, Microsoft, they're all getting rid of low performers. They're cutting the fat. So there is a lot going on that I think we're going to get this recession, that
Yeah.
we've kind of been toying around with for a while. And so,
On top of,
yeah,
right, credit card debt.
right, right.
Right? So we seeing
Oh,
all-time highs
mhm,
of credit card debt, right? So you talking about people are living and spending on their credit cards and then getting laid off,
yeah,
right? I think that that's going to be a huge problem for us. On top of the fact that, outside of all of that, I think a huge problem is the fact that our president and our
mhm.
Federal Reserve chair are at they're having issues.
They're having issues. I get it.
Right. I think that's the best way that we
Sure.
could kind of frame that, right? So when you add all that together, I can't be optimistic that everything is just going to be great, right? So I was doing a workshop today for a charter school, and I had a 22-year-old young woman ask me a question, and it kind of took me back, right? And so her question was, all of the stuff that you're talking about, I'm reading all of these headlines, and what would make me as a 22-year-old person want to invest in any of this stuff that you guys are talking about? Because you're seeing like every time I turn on the news, it's some bad news,
Yes.
right? And so it kind of made me smile, but at the same time, it's like if I'm 22 and I have no context of how any of this stuff works, I'm
Right.
probably framing my mind to think exactly why would I do that, right?
Right. Right.
And so I know that you have kind of like a headline piece of all the different headlines that
Yeah.
we've had over the course of since 1929, right? So I kind of want you to talk to through that because I think that that's powerful.
Right. I wish I had loaded it up. Maybe I can load it up while I'm talking. But yeah. Basically, you have. I even have one in my office here, but you have all of these headlines that talk about the impending doom. Basically, everybody's seen a movie where they make a parody of the guy that's on the street saying doomsday is coming, right? And so we all know that that day has never come. And so there are headlines that are doomsday headlines that going back, like you said, to the 1920s. And some of them people know, like capitalism is dead is a big famous headline. There was one tied to housing market, but it was in the reverse, like just how great the housing market is, and that was right before the crash. I think Jim Cramer's famous for saying the S&P or the Nasdaq's going to go to like 5,000 at the time. That was the top of the market. It crashed later on. So there's all these headlines that are, even I'll say the most recent one, the Sell America trade. Like there was literally a Sell America headline yesterday before the parties that be kind of changed their mind. So when I think of like the 22-year-old, I think of the 70s. Like in the 70s, we had a bear market. The market started here in 1970 and ended here in 1980. It was a flat market with two bear markets inside of there. And you had lines at the gas station, geopolitical conflict. People didn't like Carter. Nixon was still hanging on, kind of an after hang on the economy. All these people have been assassinated. It was just garbage, right? And just a
Yeah.
corporate malaise. And though that was probably the best time to get ahead of the 80s, 90s boom. And so that's what you tell them. It's like a headline. You can't invest by headlines. You got to invest based on fundamentals, technicals, and just getting in on the ground floor if possible. So yeah,
Yeah, and to your point, right? We had all these different headlines, and so my question back to her was, is this an excuse for you not to manage your money properly?
yeah,
Is this an excuse for you to not make sure that your money is working as hard as you? Because I tell people all the time, if your money isn't working as hard as you are, you're gonna be working for the rest of your life.
that's
The
true.
worst thing that you could do is wake up, be 65, 66, 67 years old, and have spent every dollar that you've ever made, right? And your excuse is that I was fearful. Your
Right,
excuse is that I had these headlines, right? And
right.
so I looked her dead in the eyes, like, look, we got to get to a place where we're going from generational consumption to
Yeah,
really trying to figure out how we can get to generational wealth,
all
right?
day.
And we can't do both. And
Yeah,
so, and it all comes from your mindset.
yeah. Now I like that. Of course, you're great with the. That's why you are. You know, you're the closer. You know, that those are awesome. You know, I was just telling the client, the one I met with before we had to go on live, and I was saying, you know, we were talking about saving for college, and I said, well, think of the Walton family. Like the Walton family has the shares that Sam Walton gave them. They still have them, right? And you and I know there are ways we can keep those shares, use those shares, and just keep passing them on, but still benefit the family. And that's that generational wealth. And I think sometimes when people think generational wealth, they think it's a big number, but it's literally, to me, just, you know, okay, you're a first time homeowner. The next generation shouldn't be first time homeowners, right? You're a first time investor. The next generation shouldn't be first time investors. So I should inherit a house, right? I shouldn't, you know, I should inherit a stock portfolio. I should inherit land. And you're right. If a headline's stopping the 22-year-old, then his or her, you know,
We
22
don't.
year
We
old ain't
don't.
gonna have nothing, right? You
Right,
know,
because then you got to think about it from the context. I had to let her know, like, listen, out of everybody in this room, you have the biggest opportunity because you're receiving this information at 22. So you
exactly,
starting at 22, and some of these other people are in their 30s getting this information. Even if you did less, you're still going to have more because of time, right? Time is our best commodity. And
exactly.
so, I would tell you that, right? The markets are on sale. So
They are
because they're on sale, you're able to get in at a better price. So it's kind of like if we was to go to the Walmart that you talked about and
right.
everything in there is 30, 40% off, what are you going to do? Right? You
Exactly.
should be buying, right? And so that's kind of the mentality that you should be, having for sure.
Yeah, and we talked about this last week, like having cash for these markets and key intervals to buy in. And one of the key points was a 2-for-1 sale. Like, you know, when this market gets down 50%, the market or the investment, hey, you should come in and grab some of that. I mean, it's going to bounce back. It bounced back after the pandemic. One that I mean, Netflix, the Great Recession, Netflix was just coming out. They were still sending DVDs, no streaming really, and the stock crashed right in 08, 09. And I saw it and I didn't buy it, you know, but I mean, Netflix is trading at 1,000 right now. You know, they're like one of the cleanest companies, and by clean, they don't have international tariff exposure. They're a service-based company, but they're a tech company because they can scale. And so this one of the best stories on Wall Street, and it was in the dumpster back in 08, you know. And so I wasn't 22 in 08, I was close enough. So little things like that I think about. And that's why this go around, I mean, you know, we can't talk our book, but we're already doing some of those things for our clients. We're
Hmm.
finding some of those good deals. But we're doing it in a manner where, you know, if this gets worse, we're not going to lose our shirt. And
Hmm.
that's one thing when, you know, she's sitting in front of you, she's got a great opportunity to be a part of that story. And that's kind of like what we want to tell people. It's like, look, if you're scared to invest, you've got a team here that you can talk to kind of be a sounding board and get you positioned smartly. Small sales pitch, but I think it bears saying. I
No,
mean,
I mean it's just we've come to the line in the sand or the road, the cross that we have to go, the pitch in the road or whatever the saying
yeah,
is that we can't continuously sit on the sidelines.
exactly.
Right. And so, even though the headlines sound bad, we may not agree with, what side, left or right, from a political standpoint. Like we can't use that as an excuse anymore, especially if we're trying to close the generational gap that everybody refers to when it comes to black and brown people, right?
Yep.
And so you're never going to be able to do that if you're not willing to get into one of the best ways to create wealth, right? So we talk about how the wealth in this country was created, three ways, right? So you got business, you got real estate, and you got stock market. And I think for, people of color, one of the ways that we've been kind of missing that boat is by, making sure that our money is in the market working for us. And so, I would just say to anyone out there, I know it's scary. But that's why you hire professionals. That's why you get with people that are not leading in with emotion. Because a lot of times when it comes to money, we typically get emotional and start to view money as a tool, and maybe we'll make better decisions with our money because that's what it starts with. It starts with the mindset.
You know, and that kind of leads me to, you said there are three ways: real estate, stock market. What was the fourth way? Business, business. But
Business.
third,
Yep.
okay. What can you want to lean into like one of your specialties, which is insurance. Like,
Mhm.
how can I use insurance in this market? Um, let's say I don't want to be emotional. Can insurance help me be less emotional, like, in terms of what I do with my portfolio, you think?
Yeah, I think that, insurance can serve as a great catalyst to supplement some of the things that you're doing, right? And so the question I tell people all the time when it comes to insurance is, what do you want it to do for you?
Right.
And so what I mean by that is that, look, are we trying to get a guaranteed benefit from it, a guaranteed death benefit from it, or we're wanting to use it as a way to kind of build wealth from a cash accumulation standpoint? Because there are some contracts out there, or insurance contracts that you can buy that allow you to build cash value. And so one of the benefits is that you're able to participate in the upside of the markets, but don't have to worry about the downside because your money is not technically invested in the market. It's just tracking the index. And so what, that's allowing you to do is build cash on an ongoing basis that is attached to the market. But if the market starts to take a dip like right now, right, we don't have to worry about the downside. We're able to just kind of participate in the upside. And once the market started to come back, we're able to still participate in that as it goes on. And here's the beauty of it all is that, we're able to take out the cash value that we've attached to this index tax free. And
Right.
so one of the main things I tell people is that if we're doing any type of investments, right, whether that's business, real estate, investments in the stock market, and we're doing all that without the tax planning aspect, we're actually kind of working ourselves backwards, right? So we want to make sure that we're doing some type of tax planning inside of it all. And so one of the beautiful ways that we can do that is by doing it through insurance because we can get a tax-free benefit.
All that. I mean, insurance is one of the often forgotten pillars of wealth, in my
Hmm.
opinion.
Yeah,
Um,
for sure.
yeah, it's just like I say, tax. Most people don't know it's tax free. Um,
It's not sexy.
it's not sexy. That's what I'm getting. It's not sexy, and as they say, it has to be sold. It's not bought. There are a lot of bad actors in the space that kind of like give
Hmm.
it a bad name, but there are bad actors that sell cars, but you still want a nice car, and so you got to get a little mature and go with that. So I do like that.
It's when it comes to the insurance aspect, right? The thing that most people don't really talk about is the case design. And
Okay.
so that is what spells out what your insurance contract is going to actually do for you. And so when we talk about the bad actors, is generally because the case design wasn't designed properly for what exactly you wanted to do based on the money that you were spending to have it.
Right.
Right. Because when it comes to the insurance, the one issue is the cost of insurance, right? Because that is the fee that you're paying, right? So when we talk about investment management, you got your fee. You know exactly what that is, right? When it comes to insurance, it's basically built off of, the cost of insurance that is directly determined by your health, right?
Right.
And so health and age. And so if your contract is not designed properly, then it's not going to exactly do what you want to do.
Right.
And so that's when those bad actors start coming in because the product isn't doing what that agent told you that it was going to do. So that's where the real issues start to come in.
And like, is there something? I mean, I know we can't give advice, but are there like three things they can look for to know if they're getting not the best deal?
Yeah.
Yeah. Yeah, what you got?
Yeah, so I would tell you that when it comes to insurance, there's a couple things you want to do, right? So you want to look and see when it comes to policies that actually build cash value, I always want to know what the participation rate is. So that's the first thing that you ask. Okay, what is my participation rate? And so anything under 100%, already go ahead and raise your eyebrow. Like, yeah, what are we doing, right? Why am I not able to get 100% of whatever the index does, right? So that's number one. Number two, I always ask, like, what is the target premium? Because most agents aren't going to probably have that conversation about what the target is. And so, listen to my wording when I say this, right? When it comes to these type of policies, what you're wanting to do is overfund an insurance contract, not overpay, but overfund, meaning that I'm putting more cash into this policy than the actual cost of insurance because that additional money is what then is in that index, and that's when I'm able to take out tax free, right? But if I'm not funding that properly, then it's not actually working for my benefit.
Right.
Okay. Meaning that, all right, so just an example. If I have, a $1 million policy and I'm only contributing $500 a month, you're not funding this thing properly, right? Because you're not actually overfunding it because $500 for this type of policy is just not going to be able to sustain, right?
Right.
So then it becomes, all right, well, why does this salesperson or this agent put in $1 million policy in front of me? Probably because he's trying to make some money, right? That's literally what's happening. And I hate to call all those guys out, but that's what they're doing,
That's
right?
what it is.
I mean,
That's
that's what it is, right?
what
So
it
we
is.
want to make sure that whatever we're looking at, we're looking at what that target. And if you ask the agent that, they're probably going to be like, "Oh my God, I can't believe you're asking me that." But you want to ask, "What is my target?"
Yeah.
And then everything needs to be based off of that. And then the last thing I would say that we want to look at is ask them what the cost of insurance is based on
Mm,
your age, and because they can tell you what that cost would look like, from a if you just by basing it off of, all right, if I'm standard, preferred select, whatever that company's line of health questions, they can kind of give you a gauge, right? It being an estimate. It's not going to be for sure until they know what your rating is, but they can kind of tell you what that looks like. So those three things you can kind of alleviate, getting into some bad products.
I like that. I mean, and people just agree for participation rate, which means, hey, if the index or the market goes up 10%, you're getting 100% of that 10%, right? Is that kind of
Mhm.
okay? And then target premium, right? Hey, just ask it. I mean, I know what it is, but if you ask it, that insurance, the whole conversation will change.
It totally would change. And let
Yeah.
me throw one caveat, right?
Yeah,
Because
go ahead.
the last point that I made is definitely important. But the other thing you want to ask is, what's my cap rate?
Okay. What's my cap rate? You're right about that. What is my cap rate? Yeah. Yeah.
Right. And
Yeah.
so basically what that means is that some of these insurance contracts will have a cap on what you can make. Right.
Mhm.
So it could be anything from 10 and a half to 11. Some are at 10. But then nowadays they actually do have some products that have an uncapped strategy, meaning
Okay.
that there isn't a cap on what you can make. And so that's going to be important. And don't let them gloss over what that cap rate is, right? Because they will just gloss right over it, right? You won't even know you have it.
All right.
And because you just need to know these things, right? So I would say that was probably just as important as the other things I said, but and maybe even more important, especially when we're talking about if I'm buying this insurance product because I want to build wealth inside of my insurance contract, I definitely need to know what my cap rate is.
And that's important because I mean, the wealth inside of the insurance contract, since people are worried about the market, but they still want to build wealth. There's this insurance thing, right? I'm just speaking plain and dumb, right? Because but what I need to know is, hey, my risk is basically minimized because of it's insurance, and then I want to build as much wealth as possible. So if I got a participation rate at 100, and then you aren't capping how high I can go, and my costs are low, then I'm getting a good deal. And I mean, the agent's going to make money, the insurance company has to make money, but the trade-off is my risk has been taken out. So I think that's really
Yeah, I
important.
mean, asking yourself the question, right? Here's one of the best ways to ask yourself the question:
Mhm.
how much of your wealth do you not want to be subject to market risk?
Perfect. Right there. Right there.
Right? If you
Right.
ask yourself that question, whatever that number is, right? And so that's where having an advisor, you're able to, kind of dive deep to kind of figure out what that looks like for you. And there's not a right or wrong answer, right? But over your overall surplus, right? Your overall portfolio, if you looked at it from a numbers perspective, how much of that do you not want to be subject to market risk? Right?
Exactly.
Because there are a few risks that you always want to make sure that you're addressing. I would say market risk is one.
Mhm.
The other one that I'm starting to see a lot more now than it was before is longevity risk,
I knew you were going to
meaning
say
that
that.
like people are living longer,
Right.
right? And so because we're living longer, then that means that when we talk about from a retirement standpoint, we need to be making sure that our money is lasting longer for our retirement, right? Because back in the day, you might be looking at a 20-year retirement and then you out of here, right? Maybe 25. Now people are living 30, 35, 40 years. And
Yeah.
so that money has to last a lot longer. So what
Right.
are we doing, kind of in that situation?
Yeah. I mean, every day Samuel Jackson does a Capital One commercial. This is an octogenarian. I'm sure Samuel Jackson, if he's not an octogenarian, he's a whatever a 70-year-old is, right? And
Yeah.
so, he looks in great health. And so, I always use the superstars to kind of determine what's old. And he seems pretty fit and pretty healthy. So longevity risk is, hey, what if I live as long as Samuel Jackson? Do I have my Capital One commercials when I can no longer do, X-Men or what's that, Avengers? To your
Or
point, I
Morgan
mean,
Freeman.
or Morgan Freeman, right, right. And so what I like about, because we actually have a client, we have a lot of, we work on a lot of clients together, and one of our favorite clients, I think I can say that without getting in trouble. Um, so I'll say they, so nobody can guess, who it is. He's thrown a lot of at us, right? Hey, what if I retire in the middle of the year? Blah blah blah. And he's got a huge crypto position, right? He's got in other stuff. And when I'm doing his stuff and we're doing it, it always, and this is going back to what you talked about, it always gives me solace when we see, okay, we got so much in these insurance products, right? And so this ties into longevity. If I know I got this insurance product as a backup, if I'm going to live longer, I got to take risk longer, right? So how do I mitigate some of the volatility of taking risks longer, yet still get a return that outpaces inflation? That's where that insurance, slides in. So in
For
times like
sure.
this, because right now people live, the market's only down like 9%. I mean, it's been down 20. you know, if I got something in this insurance product that's like, okay, I'm protected from some of that. That's very comforting. I mean, so I don't have to worry about if the bottom is in or what's going to happen next. I've got that working for me. Plus, whatever I do earn, since it's tax free, it's like an extra return on top of that, right? It's like a 20% on top of my what I if the market gets 10, I technically get 12 because I'm not paying taxes. So it's really cool. I mean, it's something that people don't think about. That's why when you said the three ways to build wealth, insurance often gets forgotten. Not that you forgot it. I know you
Yeah,
remembered it,
yeah,
but
yeah, yeah.
people.
To be frank, I actually consider insurance and investments as one bucket, right?
Okay,
Because the way that we use it is more of an investment tool,
that's true. That's
because
true.
you're able to supplement, right,
Right.
your retirement, especially if you're utilizing it, the way it should. And so and then when you start to have and transition that conversation, I tell people every day,
Mhm.
the more guaranteed money you have in retirement, the more happy your retirement is going to be.
Hey, what's your favorite retirement? Retirement's about what? What do you say?
Income.
Income. Income, not
Retire
asset.
every day,
Every day.
right?
And
Every
that's
day. Because really all you're trying to do is replace today's dollars tomorrow. I mean, that's
true.
all retirement is. You're trying to create your own salary, your own pension, so
Yeah.
that you're able to live comfortably in your retirement, right? And so if we can build a way where we can build your wealth and protect it at the same time, now we're really getting somewhere.
Exactly, exactly, exactly. So when times like this come up, and it seems like every 2 years, I mean, 2022 inflation crisis, 2020 pandemic, let's see, that leads us to 2018-19 trade war, you know, 2016 election risk, 2014 coming off the healthcare, trying to get that in. And before that, maybe not quite 2 years earlier, but we had the Great Recession. So, I graduated in 2000. We've had the dot com, the Great Recession, the inflations, the pandemics, the tariff and trade wars. I mean, it's like every 3 or 4 years it's something. So if I'm like your 22-year-old and I wait for these headlines to go away, I'm never in the market. So there's got to be a
Never.
path forward. I think insurance is a way forward. Not that we're not even trying to sell insurance. We're just telling you if
Mm.
you're in front of Marcus and myself, it's going to come up, and we're trying to kind of tell you why. Um, yeah, so I was thinking about just, if people are looking, if you were looking at this market, like, and I'm 22, we can't say where, but what do you see that's gotten beaten up, like that you think, hey, this might be around. Like if people were saying, hey, what can I salvage in this trash heap? What are you seeing, or that makes you?
I mean, I think it's obvious,
Mhm.
right? And so I think it's an easy answer, and I would say somewhere in the tech industry and AI. I
Yeah.
mean, pick one. They're gonna come back. You know what I'm saying? I'm not giving you any advice on which one,
Right.
right? But
Right.
I tell people all the time to
Mhm.
just think about what's in your house and what are you using.
Yep.
Like I think sometimes we make investing a little bit more complicated than what it has to be, especially if you want to be a do-it-yourselfer,
Right.
right? Think about and utilize the products that if, I think of it like this.
Mhm.
If I'm going to invest and I want to have something that I think is going to work, I say, all right, if I took something away that's in my household and I would be, have an issue if it went away,
Right.
then maybe that's something I should maybe invest in.
I like that. I like
right?
that.
Because I probably know it's not going anywhere,
Right.
right? So, this isn't advice, it's informational purposes only, right? But
Yeah.
just take me for instance. If
Mhm.
Apple went away, my life has changed.
I think that's true of most people. Yes. Well, people. Oh, most people who use Apple and people who hate Apple. I mean, those are two big categories.
E-
Oh
Either
yeah.
way, either
So yeah,
way, right?
yeah.
So regardless of what you feel, right,
Mhm.
I think that they're getting hammered a little bit because of the pricing issue that we talked about a little bit earlier. It's hard for them to price things, right? Because we've seen where the iPhone could potentially be, $2,000 or whatever,
Mhm.
right? But that's probably primarily because of those tariffs, right?
Exactly.
Once everything kind of evens out, but think about it. Like the stuff
Yeah.
you have in your household, if it went away tomorrow, what would that be if you would have an issue about, right? And so just kind of thinking about from that. And if you want to take it a step further, right, where is everything going? I think
Right.
we're in the 1999 2000 bubble of internet with AI. I think that's where it is right now. AI is right where the dot com first came in, right? Chat GPT is that, Copilot is that dot com when it first got here, right? So there's going to be some players in here that are going to creep in,
Mhm.
and they're going to be the winners. And I don't know who that is, right? And I
Right.
don't think nobody does at this moment. But there is going to be something that comes in this AI space that is going to be something that we should start probably paying attention to.
Yeah, and the AI, I mean, it's almost like because it's definitely impacted our practices. I mean, you're using something that I've been slow to adopt.
Hey, listen,
You
man,
know,
it's a game changer. It's a game changer, man.
so I mean, it's a note taker, right? We don't have to say what it is, so because
Nah, it
they're
is
not
more
paying
than
us.
a note taker. It is
Okay, it's
more
more
than a
okay.
note taker.
Well, go ahead. So I thought about you this morning. I've done a lot today. I had a physical, old man physical, and doctor comes in and she says, "Did you see our disclosure out front?" And she rattled off some acronym about some company, but basically it's like the one you have. She's like, "I no longer write notes while we talk. I'm just going to use this thing right here." And I'm like, "Hey, we're using it at the firm, so I get it." And literally when she said that, because my issue was disclosure, and I'm like, if they're doing it in the doctor's offices, then but my whole point is it almost seems like AI is adopting so fast that we're almost getting to a commodity level existence. Not to say premium players want to rise, but it's like, man, it's like in every nook and cranny. But let's roll with your AI concept. That's where I'm going with this. So I look at AI and the AI bubble, because there was a bubble. You could say the bubble's being let out right now as the .com era, where all right, just because .coms blew up and internet, I think back then internet 2.0 blew up. Let's face it, 5 years after the .com, if you open a hotel and you ain't have Wi-Fi, like high-speed internet, nobody was at your hotel, right?
At
That's
all.
how I see AI. So 5 years from now, if you don't have the chips and infrastructure to run AI, nobody's using your product, right? Nobody's ordering on your apps. Nobody's doing nothing. They're not ordering your merchandise. You got to have that AI there. You got to have the AI agent, AI note taker, all that stuff. So I don't even think we're giving advice by saying, yeah, if you're looking in the trash heap of stocks right now, the AI tech sector, you got to give it a look. I mean, it's just you
Have
pick
to.
the stock. Yeah, I mean, it's the
I
way to do
mean, listen, I mean, either you gonna adopt or you
it.
gonna get eaten up,
Yeah,
right?
yeah,
Because it's coming regardless if you want to or not. You can avoid it all you want.
right,
And I think honestly, if people just learn to use it
right.
and utilize it in what they do, that it could help enhance what they're doing. And so the
Yeah,
reason why I say that the software, the AI that we're using is more than a note taker, because it's capturing so much stuff that I know I would have missed,
it's
right?
true. It's true. Your notes are
And
beautiful, by the way. Your notes,
thank you,
they look beautiful.
thank you so much, right? And
encyclopedic.
so, yes, and so what is allowing me to do is use my knowledge
Mhm,
mixed in with the AI, and
mhm,
now we're able to combine it. So now you're able to get a better picture of, all right, if I was hearing everything properly, with my opinions with it as well. And
right.
so I think that changes the dynamic of the practice, right? And so
All that.
if we're adopting it, doctors are adopting it,
Yeah.
right? I just think that this is going to be kind of the new norm.
I mean, I
Um,
even think when you and I drive the same vehicle. I think again, nobody's paying us, so we're not going to plug it. But
nope.
you know, but taking our vehicles into our service advisory, if there was a note taker there, I think it will make their job. I know we're saying stuff there because if your service advisor is like mine, people are in and out of the shop while he's talking to us and whatnot. So yeah, I mean, I think that yeah, I mean, if we're talking investment strategy, you got to go where the things that are going to be here 5, 10 years from now are going to
Hmm.
be here. It's like to me, I always use McDonald's like this. Like, McDonald's was here when I was a kid. It was here for my kids. They're probably here for my grandkids. Now it's all unhealthy food, but if McDonald's, to your example, went away, there would just be another fast food king. So fast food is here to stay, right? It may go through cycles, but it's here. So that's how AI is. It's fundamentally, and I think in our business, it was the missing link for so many of our other CRM, practice management server. Like, how do I get this meeting into the system? And you said sticky notes, and for me, I've got
Legal
note
pad.
planner here. Yeah, those are never getting in
But
there.
but it's all over the place, all right?
Yeah.
And
Mhm.
everybody, no, I don't care who it is. You can take the best advisor, just pluck them out. If I went through his notes and just went through on that paper, he don't know. Like, listen, man, he'll be like, I think the framework was around, right?
Yeah.
And so now we're adding the opinion. I think the AI just makes everything where we can be more professional. I think
Mhm.
we can service our clients better,
Right.
right? And now I can have context on the last conversation that we had, right?
Yes.
Versus me saying, you know. I
Yeah.
think, right? And so I think it's more of an accountability
Yeah.
measuring stick,
Yeah.
right? That we're able to now incorporate into the practice. It's just going to make us better because now it's not me guessing or assuming what we talked about. The AI told me,
Right.
right? And
Right.
so it could be good or bad, right? Especially if we're trying to achieve a goal, right? And
Right.
so now we add in all those other practice management tools that we have. And
Yeah.
now this is literally based on the conversations that we had.
Right.
And this is what you told me that you wanted to accomplish, right? Now, whether we get there or not, right, it's going to be mostly depending on the work that we do, right? And I'm going to say we, right? But y'all
Yeah.
know what that means,
Yeah.
right? But,
Yeah. Yeah.
but yeah,
And,
I just think it's going to make us better.
yeah, and basically you're talking continuity. Like we work with a lot of clients, like you are in a part of your career where you're starting to get your 20 somethings are now along with you, and you're seeing that journey evolve. Like you're doing the weddings, now you're doing the first birthdays, 10-year anniversaries, things like that. And like I'm at the point now where I'm giving out 20-year anniversary cards to my clients and they're thanking me for the journey. Well, if I could have gone back to 2004, 2005 and had that conversation well documented, I mean, what a great scrapbook and just show the continuity because some of the stuff we actually did, like we actually got certain type of house, certain type of account size. And so, yeah, I think it's great. And I can't wait to see what else is next with it. And the thing is, and I'm gonna plug us real quick. The more successful your advisor, the worse he is at taking notes because it's just what it
you
is.
you got stuff to do.
Yeah,
That
you got
like
stuff
and the
to
thing that I think that gets overlooked in our industry,
do.
especially for on in the independent space, right? I can't speak for the wirehouses, I can't speak for, the other things, but when you're dealing with an independent advisor, they're a business owner too.
Yeah,
Right. And so a lot of times you frame them in the mode, oh, they're just an advisor, but a lot of times we're dealing with the same challenges that a lot of business owners have too. So we're not only running, meetings, but we're also running our business.
yeah,
And so sometimes stuff is gonna get, it's gonna fly under. Right.
yeah,
And so and especially the more clients you start to add on, and the bigger you start to get, that start to happen. And so this tool for me was a game changer,
yeah.
right? Because now it ain't no more of that. I sit here, I turn it on, and it goes. and I'm not missing anything, right?
No,
I
you're
probably
not
have too
missing
much
anything.
stuff.
Oh yeah, yeah. No, you're definitely on it. And I mean, yeah, I have over the last 6 or 7 years, I've realized I'm starting to lose track of what's going on in each client. And when I started noticing it, when they would say, "Hey, man, that thing you told me to do, that was a good move," and I'm like, "Oh, what? Oh, I told you to do that. All right, yeah, let's go for it."
Exactly.
Oh,
Exactly.
yeah, I'm glad. Yeah, yeah.
Hmm.
Let's do it. Let's do it.
Hmm.
Um, so for the audiences listening, like AI is helping advisors, doctors, mechanics. It's just doing everything. So yeah, I think the AI area, since we can't say any particular names,
No, I won't say any name, but I will say that I met with a guy who helps design. I think it's called LLM,
oh yeah,
right?
large language models. Yeah. Hmm.
Yes. So
Hmm.
he is a part of that. And so basically, for people who don't know, and like me, I didn't know until I had this conversation with him. That is what trains the AI, right?
Right.
So there's, they're trained to pick up on certain things, certain groups, and so if the AI isn't trained in a particular area, it won't be able to capture whatever you're asking, right? And so he was informing me, because I was asking him, if anything, what would be the fear?
Right.
And because I just want to know, right?
Right.
What would be something that I should be start to just kind of raise my eyebrows, like, okay, where is the concern really coming from? Because to this point, everything sounds good. It's making us more efficient. It's great. It's integrated with everything we're doing.
Mhm.
And so he looked me dead in my eye and said, well, they're trying to develop it to have emotions and to think like a human, right?
uh,
And so now that kind that kind of scares me, right? Because
right.
I was like, well, if I'm trying to call in on a 1-800 number, is it going to be the AI? He's like, yeah, they're definitely training it to be able to talk to you and you not know that it's
Yeah.
AI.
Yeah. Yep. Yep. AI agent.
Yeah, so
Terminator
so
2.
so out of everything, right? And I don't know what that's gonna look like, right? I'm not no LLM coder or whatever they call themselves, right? But that was one thing that this guy informed me would be one thing that could kind of concern you.
Yeah. And the thing is, it's kind of like picking a spot in history. I'll go with CDs, right? When I was around when vinyl transitioned to CDs, it's like me standing up there and saying, "Okay, this is it. I don't want to go any further than this. No streaming, no MP3s, nothing." And that didn't happen. So immaterial of the risk or the fear, it's happening, right? And
Yeah,
so
yeah, that's true.
yeah, yeah.
Ain't nothing you can do
So and
about
so and
it.
so just going back to that, and that's it's just kind of like, so going back to your 22-year-old, it's like, hey, get on the train, get on the train. And the great thing about the market is, what I always liked about the market, what attracted me to the market is it's the most democratic wealth building vehicle out there in terms of I don't need a loan. They don't know what I look like, I think. Like, so there's not like
Hey, I
it's
might
not
change that.
right. I'm not a DEI investor, right? And until recently, this just developed with fractional investing. Now I can just use $1 and get all these stocks. And
Mhm.
so going back to the young person, 22, 42, like you really have no reason not to take advantage, of this wealth build. You're in Nashville. I would venture to say a lot of the great real estate opportunities are off the table for now in Nashville,
It's
right?
over.
So
It's over. It's
it's,
over.
it's like going to New York in 1980 and saying, well, I'm gonna wait till the prices go back to 1970. That never happened, right? Okay, so real estate's out unless I get way out in the other counties, right? And then they got to build the okay, so that's out. Business ownership. Well, you got to compete with, it's hard to have inventory based business, and then service based businesses, it's hard to find workers, right? So it's hard to have a business. And so the stock market is one of the last games in town where I can jump in and make money and not have all these barriers. And so markets like this, where we're talking about market outlook, market update, what's going on. The flip side is this one of the best times to get invested. So if you could get into Nashville real estate when both of us were in college, that's the market right now, right? I mean, every year people go back to homecoming, they're like, oh man, I wish I would have done this and that. Well, the market is giving you kind of that opportunity now. So it's really good. So people out there, we can't tell you when to invest or what to invest in, but hey, things look pretty beat up now. So, use some of these tools. Um, I wanted to tell people because I mean, you're here. We kind of just jumped into it, kind of how we work and whatnot. Some people they come in and they'll see you, and I got clients in my neighborhood who work with you directly. And so basically, you know, we work on clients together, right? And am I allowed to say, you don't like that phrase? Am I allowed to say
Go
that? I'm
ahead.
going to say
Just
you
go
are
ahead.
you are the insurance guy, but you're the planning person too, right? I mean, you're the
Yep.
planner and you are the risk management specialist, aka insurance guy. And then I'm just the guy, I'm the nerd, the investor, right? But it doesn't mean you don't know investing, but I definitely don't know a lot of insurance. But I feel like one of the benefits of us working together is that they say that two black firms, right, can't come together. They say that we can't work together. And I think for the last 4 years, we've been proven that wrong. And we have people can go to our sites, johnsoncap.com, wilsonwealth.com. We commingle teams, we do events together. It's been great. And, I feel like, we're in the same fraternity. We can plug that, but they didn't give us any money. But people who know, know us know. I feel like it's just been such a great synergy.
Yep.
And I'm just glad that we're able to do this. And I mean, I think we're going to be doing more of this, but feel free to comment on, kind of how it's
Yeah, I
been.
mean, no, it's been great. I
Mhm.
think the reason why we work so well is because we aren't trying to do the same things and
Exactly.
are stepping on each other's toes.
Right.
And we both are okay with saying we don't know something. And
Exactly.
so because of that, we're able to work very well.
Mhm.
I think the problem is that a lot of people have is when they try to work together and they, both sides think that they're doing it better or know
Yeah.
everything.
Yeah.
That's when you start to kind of have, some friction that's
Yeah.
involved.
Yeah.
And I stay in my area, right? I think I am a subject matter expert when it comes to planning, when it comes to risk management from everything, like right. So from life insurance, disability, annuities, all of the things, right? But then it can be dangerous on the investment side. But then I lean towards Maurice, who knows this, right?
Well,
And
I gotta attempt this. Yes.
but I honestly think that you really can't talk financial planning without all of these aspects, right? So there is no financial plan without protection. There is no financial plan without investments, right? There is no financial planning without actually doing a plan.
Right.
And so that plan encompasses everything that we do here. And I like to say we, right? I know we have different names,
Yeah.
but it's in my mind, it's pretty much the same thing, right? So you're able to
We're
work
working with a
with,
client tomorrow. I mean,
yeah.
we're working with a client, a big estate. Hey,
Uh,
you're there.
just view it like this, right? Do you want to work with just LeBron, or do you want to have LeBron and Jordan? Like,
There you
what would
go.
that look like?
Yeah. Yeah. Yeah.
Yeah, I mean,
Yeah.
I don't know, or LeBron and Steph, whoever you want to say, right?
Whatever you
You
want to say.
got
Well,
two
we saw
people
LeBron
who,
and Steph. We saw the result. It's the
I mean,
Olympics.
you definitely saw the result when them two brothers are together. So you
Yeah.
kind of getting the best of both worlds when we working and we on the same team. So
Yeah. 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 As I say, Marcus and Maurice are the first and last name in finance in Nashville.
yes, 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 that is fact. That is fact. And
Yeah.
we talked about we can't give y'all advice over here, but you definitely can call us and we give you
Yep.
all the advice you want when you become a
Yep.
client.
Yep. JohnsonCap.com, WilsonWealth.com. And
Yep.
you know what I've liked also is that us coming together, we've been able to extend opportunities to other people to work
Yes.
with us. You know what I'm saying? We will hopefully we'll have them on maybe next time they can meet some more of the team. But and just things we've been able to do together. We've had big client events. We have we do exhibits and things like that together and just able to basically employ people, job creator, if you want to call it that. I think sometimes
Yeah.
that's a little arrogant. I feel like they're helping us. So, so
No, I think it's a two-way street, right? We're giving them an opportunity to have a platform where we understand who they are, who they're trying to talk to, and we understand their plight, right? And so then we're able to compensate them in a way that is fair
right.
for the value that they're bringing to the firm.
Yeah.
And so I think that that's a beautiful thing, right? Because everybody leaves, feeling like they're part of the team, they're
Yeah.
gathering good information and able to help as many people because that's really what it's about, right? It's about us coming together to touch and help as many families as we can to become more literate, become more wealthy, and then once they do become wealthy, making sure that we're able to protect it.
Yeah. And one of the ways, I'm still waiting for this. I kind of told you about it. I'm still waiting for this. For me, it's a client is not closed until the money shows up.
Oh, that's,
But I
that's true.
literally, yeah, exactly. I literally had a big client come in, and one of the reasons the kid is really young that they chose me was because of you. Where it was like, all right, Maurice, you're fill in the blank age. What happens in 20 years when this kid is still younger than the age I am now? And I was like, Marcus, like he's here, and he's and it's just like a great thing because there are a lot of people older than me in this business that look like me who are like, okay, they don't have somebody to hand the business off to, but as you mentioned earlier, longevity risks. There are all these clients who are going to get orphaned. And that's one thing about the advisory business. I think people come to our business, and I mean potential clients thinking of us as salespeople. And that may have been true in the 90s and 80s when we were pushing mutual funds, if you will, but we've evolved to, we're doing wills, trust, all that stuff, right? And now you need an advisor that's got a deep bench and a succession plan, right? These are real, like these are real businesses, like you said earlier. And like that's where, like when you first showed up, I mean, I wasn't even thinking like that, but in the last 48 months, I mean, life has gotten extremely busy, blah, blah, blah. And so it's a necessity now. I think you were going to say something.
Yeah, I just would say that I think that most advisors' journey into this business begins as a salesperson,
Yes,
right?
there you go.
Because you are really trying to, you want to help people, but at the same time, you still got to make a living,
Yep,
right? And so you're really just trying to get as many people as you can, and you're really just trying to sell as many things as you can to kind of sustain.
yep,
And then eventually you start transitioning,
yep.
right? Because now you don't have to do that anymore, right? The
Right.
money's coming and you're starting to really become what I call a real advisor or a planner, right?
Exactly.
Now your clients are coming to you with real questions about what they should be doing with, their 401k. Maybe they got an RSU, maybe they got,
Mhm.
different things going on that
Yep,
they really need to have some advice on. Maybe they need some tax planning, they got some issues going on, and now that's kind of where you start to transition to, especially once you start getting into, your 40s, late 30s, 40s, 50s. And so
yep.
that's kind of what happens. And so it's just the plight of how to become an advisor, right? You start off, it's rough. Right. But the problem with that is that it's rough, but you're talking about money. So it's kind of like
Yeah.
it's kind of counterintuitive in a sense, right? Because I'm talking to you about money, but I'm having challenges with
Yes.
money because I'm still trying to build a business, right?
Yep.
But the people who are able to kind of get through, that challenging period, right? I call it in the trenches.
Definitely the
Now
trend.
you really start to kind of see, and that manifests towards the work that you're doing, especially if you got an advisor who's hungry, who is continuously trying to learn, and like I say all the time, I don't know everything, right? So I'm continuously, trying to find better ways to do everything that we do.
Yeah, definitely. I mean, trenches, another word for just flat out broke. I thought for sure I'd be working at a grocery store in third shift for a while. And what's funny is like always, I know you can relate to this. When you finally make it, if you want to call it, I know we both have higher goals than what we're doing now, but we're very comfortable. Can we say that without our clients firing us?
I would say, but here's the thing. I think that they want us to be comfortable,
Yeah,
right? Because
yeah,
if we're not comfortable, then we're not thinking clearly,
that's true.
right? And
That's
so, I really think that that's what you want your advisor to be,
right.
is to be comfortable in a space where he can actually take the emotions off the table and make sure that he's giving you advice that's based on your needs and not the needs of his own.
That's
And
true.
so,
That's true.
right. And so you really want that, and that transition happens. But what I would say for most advisors, and not trying to make this advisor centric,
Yeah.
is that I found that the goalpost always moves,
Yes. Yes.
right?
Yeah.
Because I can remember, I'm not going to talk about the exact numbers, right? But I remember when we first met and I
Mhm.
told you, I said, hey, I need to get here,
I remember that number.
right? Then you hit that number, and then it's like, okay,
Yeah.
all right, it
Yeah.
needs to get here,
Yeah. Yeah.
right? And,
Yeah.
and but I honestly think that's just, this business is designed, and it's not probably just our business, right? We have clients that are developers,
Yeah.
and one of our good clients just had a great development that just sold for millions of dollars. And I'm asking them, hey, what's next?
Yeah.
More.
Yeah. Yeah. It,
Right. So
and you know what? You bring up a good point because there was a period, at least for me, where my clients were doing really good. I'm still in the trenches. And eventually a switch went off where I'm like, I could hear how well they were doing. And I didn't instantly think about where I was at. Right. And so to the point that did allow me to be a better advisor because I could talk with them and not feel inadequate. Right. And I think, I mean, you're a business owner. Business owners don't start off rich usually. Right. So,
we all start
so
with zero client
yeah, zero clients. So it's
or
like, I'm
customers or
not,
whatever you do.
yeah, I'm not ashamed to say it, but yeah, by the time I run into like this guy you're talking about and just people that I mean, we seem to be getting a lot of well-known people as clients now, I don't feel intimidated or inferior. Probably inferior is
Nah.
a better word. Now I feel like I'm on, okay, this is good, level playing field. And but you're right about the goal. That does switch out, and that's what you want. I mean, I want my advisor to want more, and as long as it's ethical, which I know it is. I mean, it's going to be ethical. I mean, we have the trust but verify rule that we
Yep.
both
All
adopt.
day, every day.
Yeah, it's just what it is. So, well, cool. Well, all right. Well, tell the audience, because we're gonna do more of this. We're gonna do more Marcus and Maurice segments. I'm gonna be on your show, and oh, okay, looks like it's on the screen here at johnsoncap.com. But just tell them where to find you, where you're located, all that good stuff.
Yeah, so y'all can also reach us at johnsoncap.com, just as you see here. If you're on social media, we're at Johnson Capital Planning on Instagram, and my personal is Marcus D. Johnson 13. So y'all can reach us there. And we're right here in Nashville, Tennessee. So if you're local and you're looking for an advisor, someone to kind of help you iron out, on a range of different things, we're more than happy and happy to kind of help and assist you guys.
Definitely, definitely, definitely. So Nashville, Tennessee, Marcus and I, we're if you're in Nashville, you know about Tennessee State University. So all my TSU alums, I feel like you have no excuse.
You don't, no excuse. And matter of fact, I said Nashville, that's just where I'm located. We can help you wherever you are. We
Yep,
got clients all the way in Hawaii.
we sure do. We sure do. But
Right.
particularly
So,
our TSU cities, Atlanta, Memphis, Detroit, all the Midwest, Texas, we see you state. Um, we want to make sure that all our alums are definitely positioning themselves. This is a great opportunity to truly build wealth, and you have two reasons to do it. Marcus and
mhm,
Maurice, and
there it
we're going to
is.
do more of this. We're going to come back with specific topics. Marcus, you brought up the RSUs. I think that's one we need to dig into. People are always
Yeah.
shocked by how they work,
Yep.
and
Stock
maybe
options, all of it.
all that. Yeah, maybe we'll talk about for those RSUs, ESPPs, and stock options. I think maybe we
Yeah,
do
and
an episode.
yeah,
Yeah,
employer stock on, right. So
yeah,
yeah, we can do it.
yeah. I think we
Especially when you
should.
start about talking about the strike price,
Yeah,
tax implications that come with it, because it's a lot of working pieces, right,
yeah,
when it comes to that type of stuff. And so some of our clients are starting to transition into that, and
yeah.
so maybe having a high level conversation on that stuff will probably be really helpful. To things to start to consider.
Yeah, so if you guys are joining or in either in the newsletter, you got Marcus's website, email us if you want to hear that. Marcus at johnsoncap.com or Maurice at wilsonwealth.com. Email us if you want us to talk about that next. Sign up for our newsletter, bit.ly/wealth equation news. And Marcus is going to have his. You'll see me probably next time on Marcus's show. But my name is Maurice Wilson. Thank you for joining us tonight on the Wealth Equation Podcast. We come to you every Wednesday with topics and discussions such as these. And feel free to follow me at Wilson Wealth on Instagram. Maurice the Advisor is my personal, and wilsonwealth.com. Get involved, get signed up for our newsletters, stay in the loop, and please join us next week at 8 p.m. on Wednesday. This has been Maurice Wilson with the Wealth Equation Podcast. Thank you.
Peace.